We want to think about a transaction now to void a check in particular. And as we think about that, we want to expand in our mind the general concept of why that could be a problem. And one reason it is a problem is because in the accounting system, we don't typically like to delete things or to go back in the system and alter data input forms like any of these forms because we lose the audit trail by doing that. So if you just go back in and you change something, then you've kind of messed up what was done before. How would we prefer to see it fixed? You do another transaction to reverse what was done in the past because that gives us the audit trail. So that's one problem. Another problem is that if you go back and delete something, then oftentimes we're thinking about fixing one part of the accounting system, such as checks that never cleared and are showing up in the bank statements, or possibly they were entered twice or something like that. And we're trying to fix that, but we don't think about the other side of the transaction because every transaction has two accounts impacted, the other side of a check typically being an expense, which is on the timing statement of the income statement and has already been recorded, particularly if it's in a prior period. In other words, if I wrote the check or entered a transaction last year and it impacted the income statement, then I've already used that income statement for the creation of the financial statements and possibly for the tax return. If it was an expense, I've already expensed it, right? So if I delete it, then I'm going to mess up the prior year's income statement. And that's where the problem comes in. So we want to be very careful deleting things, particularly in a prior month or prior year. That could get you in a lot of trouble in an accounting department. The CEO or the accountant is going to go crazy. Like, yeah, you deleted some. They'll probably lock the system so you can't do it when you're in an accounting department, right? But bookkeepers have to be more careful because they have the ability to go in and basically delete things if you don't set up an internal control to close out the period and not allow you to delete things in a prior period. So checks are the classic example of this because you might, even if you have bank feeds, have pulled in for some reason two copies of a particular transaction, in which case only one of them is going to clear, and then you'll have the other one that never clears when you do a reconciliation process, and that's when you'll see it as a problem that you need to fix. You also have similar kind of situations like with a bill form, for example, where you might have look at your accounts payable statement and notice that you have these bills that are no longer due for whatever reason. And you're going to say, well, now I should delete all these because when I look at my accounts payable, I should say, then I have all this information. I want to delete them, but you have to have the same carefulness in doing so, because if you just delete them, you're going to delete the expense forms that came up. Similarly, the accounts receivable will have a subledger to it, as we'll talk about in future presentations, and you'll have a similar case possibly where you're going to say, hey, look, I'm looking at my accounts receivable subledger and I have all these amounts that they say that I owe to, that people owe me, but I'm never going to get paid that amount because they've been outstanding forever. I need to clean this subledger up. How am I going to do that? And the tendency is, well, I could just delete a bunch of transactions. But you don't want to do that just willy-nilly because that's going to mess up, again, prior period types of transactions. So anytime that comes up, inventory is another issue where that comes up. Anytime where you're saying, I'm trying to fix a ledger or I'm trying to fix the outstanding checks, and you're thinking, I need to delete all this kind of stuff, you have to say, okay, how do I do that? How can I do that so I don't mess up the prior period? Now, I'm going to show you this just in terms of journal entries first,